Nicolas Loris, who's an energy economist at the Heritage Foundation here in Washington. Nicholas, we really appreciate you being with us. First and foremost, can you break down for us what happened and how we got here?
Yeah, the crux of it is an epic demand side collapse. The International Energy Agency estimates that demand is down nearly 30 million barrels per day from a year ago. If you have that on top of already low oil prices, even before the demand side effects of the coronavirus pandemic took effect, you have this cascade and plummeting price point. And with that demand not rebounding at least anytime soon in terms of economic businesses reopening or people driving more, people flying more, you're kind of in this standstill pattern where demand is going to be incredibly low when production was very high.
Nicholas, who's to blame for this and who benefits?
Yeah, that's a great question. The the blame partly goes to the pandemic. It obviously we want sensible public health policy, and the social distancing and the closures all make public health sense, but that's going to come at a price. And that price is dramatically lower prices for oil and shutting in of production and potential bankruptcies and consolidations. Ostensibly, the benefits usually accrue to big energy consuming businesses and to drivers through lower prices at the pump. But right now, people can't drive anywhere. Or if they do, they're taking very short trips to the grocery store and back home. And that's ultimately what we want right now to continue to fight the pandemic. Maybe as regions reopen when it makes sense to do so, and if we're open in the summertime and people are allowed to take vacations and it makes sense to do that, it'll be good for summer driving season. But right now, the typical benefits for people who buy oil and consume gasoline really aren't able to accrue those benefits right now.
Also, Nicholas, who needs to take a hit by cutting production right now? And do you see any particular leader, party, or group stepping up to move the needle on this to help mitigate it?
Yeah, honestly, everybody does and probably will. And I don't think it needs to be part of a cartel decision in terms of the United States mandating that production cuts need to happen, as has been discussed. And Texas has had discussions about proration. That's going to happen anyway, because it's not going to make economic sense to continue to produce oil in certain places. And rather than have the government mandate which companies should reduce their production, it will be the most economically efficient way to reduce production by letting the market figure that out. We've seen Saudi Arabia before the coronavirus pandemic engage in a price war where they said, regardless of prices, we're going to continue to pump out supply. They've walked that back rather quickly because of this demand side collapse. And so there's been an agreement among the OPEC plus countries to cut production about 10 million barrels per day. That's not going to be enough. It's certainly a start, and we've seen futures contracts for June at about $20 per barrel for West Texas Intermediate. But that production cut in the United States is largely going to happen on its own because some of those companies simply aren't going to continue to be able to operate.
Nicholas Loris with the Heritage Foundation, thanks so much for being with us. We really appreciate your analysis. Thanks for that.